Matt Orton is Chief Market Strategist at Raymond James Investment. We also have William Lee, Chief Economist and Executive Director at the Milken Institute, who's with us. Gentlemen, great to have both of you here. Thank you very much. Prashant this side. William, if I can start with you, a quick word on the developments over the weekend. Of course, market reaction is pretty muted, as I began by saying. Across the board, oil's up 2%. Equity markets, not very much. Neither here nor there, so kind of sort of moving on. But markets will wait for how Iran responds. In a counterintuitive way, since markets are not responding in an aggressive way, William, do you think if Iran's response is actually a weakish, symbolic kind of response, there is a downside for oil from here?
Well, you have to remember that the amount of oil that Iran produces is potentially at the 3 million barrels per day level. But because of sanctions and the war that's been going on, the latest reports are that its exports have been down to about 150,000 barrels per day. That's about the same production as we have in the state of Montana. So the impact on the oil market has already been felt. And yet you see that oil prices are only about $78, which is where it was back last January. I think the Iranian reaction that's where the huge amount of uncertainty is. I'm sure that there'll be Iranian proxies and sleeper groups that are being activated, and acts of terrorism around the world will be something that everyone will be watching out for. But in terms of how that affects markets, that is not something that I think can be systematically priced into markets. It's a global act of terrorism, potentially aimed at the United States more than elsewhere, but certainly aimed at U.S. allies as well. And I think the markets right now have such a diffuse level of uncertainty over so many possibilities that markets really aren't reacting right now. But I think the cloud of uncertainty certainly is much broader now than it was before the strike occurred.
No, absolutely. Point taken. Matt, same question to you. If this does not escalate and the response from Iran is small, even this $15 surge that we've seen in oil, it'll disappear pretty fast because there is spare oil capacity. And my question is there actually, in a counterintuitive way, if you think about it, more downside rather than upside from here?
Yeah, good morning, Prashant. It's always great to join. And I would agree. I've been telling clients over the weekend and writing a note that, it really depends on how Iran reacts. But right now, the probability of one of the left tail scenarios is still fairly low. Iran's very constrained with respect to its options. The reaction to whatever Iran does is going to be quite negative if it does take some of those more left tail scenarios. And so while this is not a market I would be chasing higher, I would be looking for signs of a de-escalation in the coming weeks. And I think you do have the potential to see oil prices come down if there's any more certainty. I also think that there's the potential for the dollar to continue to weaken, even despite its strength, once we get a little bit more certainty or maybe a little bit more visibility through the policy fog that we have right now. So I just don't see, at least based on what we know today, based on the reaction that's more likely to come from Iran, I still think that the macro fundamentals that are underpinning the rally that we've had globally speaking still remain in place. And I would be biased to use weakness opportunistically, especially as investors who are looking to broaden, get more diversification, and potentially find ways or investments that they haven't been able to lean into yet so far.
Interesting to hear that, Matt. Let me go back to Willem for a question. Willem, would you concur with that view? Because the market, at least this morning, seems to be thinking that in that sense, it will still remain limited. No one's expecting a very big reaction out of Iran. And I think from the market's perspective, as long as the Strait of Hormuz is open, yes. I wouldn't say it's business as usual, but business goes on. So, how would you gauge the situation right now from that perspective?
That's the absolute key. If the Strait of Hormuz remains open and Iran is not able to muster the military action it takes to close the strait, then I think it'll be business as usual because as I said, the Iranian supply of oil on the market is really trivial. But the key is Strait of Hormuz, where 20% of the world's oil supply goes through. And that will be a real game changer if that does get closed. But from what people tell me, the military actions required to do that are significant enough. And given that the U.S. has sent several aircraft carriers and military ships there, if they were to mine the straits, I think the mines could be cleared relatively quickly. So the kind of uncertainty that of real spikes in uncertainty are pretty limited. And, the kind of buy the dip strategy that has worked so well, I think will probably continue to work in this situation, because it looks like the fighting will be fairly contained, barring these unusual kind of radical terrorist attacks all over the world.
That U.S. will bring about and bring to bear its considerable power on Iran and elsewhere if needed. So actually, if anything, this kind of presages the end of what people are calling as funny, but people are using World War III like so easily, right? I mean, a third World War is starting or whatever. I would argue in the opposite sense that there is certainty now that US. There's no doubt that US, the most powerful country in the world, is going to use its force decisively if required to end it.
If it wherever it feels it's warranted.
Yeah.
I'm just reminded of a term that we had in social studies class way back. I don't even remember. It's been so many decades back.
Yeah.
Remember the word hegemony?
Yeah, of course.
The use is back. I think this is exactly what we're seeing.
Yeah, no, absolutely. William, of course, is still with us. William, I don't know if you have any thoughts on that. It's a larger question. It's not related to financial markets. Maybe it is. But I don't know how you think about this. William.
The whole notion of geopolitical risk now, I think, has been shifted. The notion that the U.S. is the most powerful country in the world and is willing to use its military might when the just cause is there and the clear danger is there, I think shifts the balance of power somewhat. U.S. has asked China and Russia to intervene and do something, and has been asking this for so long. And I think it's shown that their political clout, as mighty as we thought it was, they're not willing to use it, whereas the U.S. is willing to use it to help its allies. And I think that's a big shift that the political scientists and financial analysts have to take into account.
Okay,
but
fair enough.
William and Matt, thank you very much for joining us. Great speaking with both of you here on CNBC TV-18. It's a pleasure as we track these developments, and we'll sort of come back to you over the next couple of days.